And today we're seeing a bit of a pullback, but it does look like commodities, energy are finally bottoming. And this has been the one area that has been divergent in what essentially has been a rolling correction since the beginning of the year. We saw tech bottom first, and then we saw the defensive sectors bottom in March. Financials bottomed in April. And the materials and energy are the last ones that have come down. And now I would say they're trying to form a bottom. So I think in terms of trying to buy something that might be look relatively attractive in terms of being oversold and also better valued, probably the resource areas is the place to go right now.
But the resource stocks, I mean, they've come off and have had a pretty checkered performance so far this year, but they've just been mirroring the underlying oil price, which actually net has been around $50 for most of this year.
Right. That's part of a process within a trading range, but I think what we're going to start to see is now that we've sort of had this rebalancing and the demand of the economy is coming through, and we're seeing.
Sorry, where's the demand coming through?
Well, we see it in our economic.
I thought U.S. gasoline demand had shrunk this year.
Well, what I meant was economic demand globally, and we see that throughout our indicators, such as the PMI data, which is coming through to the percentage of stock of economies above 50 on the PMI.
Sure.
We have well over 80% of the PMIs that have positive year-to-year change. We're seeing it come through in earnings expectations. 96% of the markets around the world have positive forward earnings.
I get you, and that's great news, and it's great news especially for Europe as well, which I know is a part of your recent upgrade as well. But my problem is, despite that as well, we are swimming in product. We are absolutely swimming in product, and when we get to 55, 60 bucks, we swim in more product as well. And actually, when we get to 45 bucks, historically, we wouldn't swim in so much because you've had these cuts from OPEC. Problem is, the shale producers are now producing at 35 bucks, which means we're still swimming in product.
Right. Well, I'm looking at this more as a trade, and that was sort of your initial question: was what are you looking for, and how can you make money now? So
absolutely.
maybe over the past month, let's think about energy, anything that's correlated with energy. Canadian dollar, Australian dollar, Russian ruble. Let's think about markets that also tend to do well when when we have China, Australia. Russia, these are all markets that tend to do well when you have resources coming back. So I'm thinking about it as a trade within maybe a trading range.
Brilliant.